Good morning, guys, and welcome to today's edition of the London Session Open. Today is a Friday, and it's Friday, June 5th, 2020, and it's a non-farm payrolls Friday. So it's going to be higher volatility than usual, and we need to be careful, especially as we have seen some decent gains in many markets, and technicals are suggesting things like the German DAX are getting a bit stretched. So we're going to take a look at that, see what's going on. We're going to cover the euro, we're going to cover the pound, the dollar, yen, crude oil, gold, and DAX, and the S&P 500. If you do have any questions or just want to say hello, you can just put them in the chat box. You'll see that to your right if you're on YouTube, and as well on your right if you're watching this on investingcube.com. And this is a daily market update we do Monday to Friday here at the ATFX channel and investingcube.com. Okay, good. All right, let's take a look at some charts, right? So people are very enthusiastic today. People are really bullish, and there's no end to this. I think what we're dealing with is FOMO. So we're effectively dealing with people that missed out and now trying to get involved. So German DAX, let's just show you a little bit of a snapshot of what's happening today. So you have the FTSE is up 1.22%. You have the US government bond yields, which are up and actually breached their range. So we have the bond market finally participating in the recovery. And then you have things like the German DAX is up with 2.27%. You have the Dow Jones, which is up at 1.29. The only thing that is not really moving too much, but it's up, is the Nasdaq 100. And then currency markets are a bit quiet as well, but you're seeing some pairs like Aussie dollar and New Zealand dollar, which tend to sort of have tend to gain in times of when everybody's bullish. So what should we do then? Well, this is the German DAX. And do you remember this? Well, of course you remember. I guess you watched yesterday's presentation. So let me just clear some stuff up here because there's way too much stuff. So we talked about that break. That break happened on the UK bank holiday. We are at the target. In fact, we're above the target of that rectangle pattern. And now the market is going towards the slow here from December 10th, 2019. And also January 31st. Low, and also pretty much January 6th low. So then what's happening here is quite straightforward. You know, all these people that do like slower type of investment, like they just shift in and shift out of positions once in a while. Those people that probably saw the rally here in October 2019, I saw this market going upwards, especially in the US markets, we're up like 15%. I think those people are effectively, they went more long here, and then the thing collapsed. So they were down with some, 15%, and they're like, oh wow, what's going on here? Maybe I should take some losses. Oh wow, we're down with 25%. I should probably definitely get out now. And then, oh wow, we're down with 40%. This is gonna go to zero. Let's close everything out. And those same people, I think, is buying now because they're like, oh wow, the market is up with 60%. It's gonna go to 100. I need some piece of that. I think those are the people we're dealing with here, and that's just human behavior. I think everybody's been in that situation at one point in their trading experience. So it's called FOMO, fear of missing out. I think those are the people that are pushing things up here. We have had, of course, some good developments. We didn't get a typical reaction though. Yesterday, we had a bearish day in the German DAX. So what happened yesterday then? Well, the ECB pushed a bigger package than anticipated. People thought they're going to expand the package with 500 billion. Well, they said 600 billion. What else? 2 days before that, the German government announced a stimulus package, which equated to 3.8% of GDP, which comes on top of another bigger package, which was announced in March. So we didn't really get a super good reaction on that yesterday, and I thought, okay, let's go. Let's wait for a little pullback. Look and behold, though, the market actually just went straight upwards, and it is sometimes like this. It doesn't mean that we should be chasing things, especially not on non-farm payrolls Friday. So what's the expectations for non-farm payroll this Friday then? Well, the anticipation is that we're going to see 8 million job losses. All right. The prior month we had job losses of 20.5 million. Now this might be this might be broken. It might be better than expected. As an example, the ADP reading, which is another labor market report, which was released earlier this week, it showed, let me see if I can pull the actual numbers. It showed that the US economy lost 2.7 million jobs. And that is much better than the anticipated loss of 9 million. So it feels pretty much like ADP, where you have expectations of massive job losses, but we only have limited job losses. And this is interesting because in the ADP number, we had pretty much 19.5 million job losses. And then come 1 month later, you have almost 3 million. So it's a huge difference. And it just tells you that we saw a massive front run. So when you got the lockdown cue from the governments in the US, they just said, all right, guys, we need to close the doors of the bar, the restaurant, hotel, or car dealership, or whatever that needed to be closed. And then said, okay, guys, we're not going to make any money over the next 3 months, and I need to pay the rents. So, unfortunately, we will need to fire everyone. So I think that looks to happen. And this is obviously good from an economic perspective and trading perspective. It's not good that 3 million people lost their jobs, according to the ADP report. What is good, though, is that only 3 million lost their jobs and not 9 million as anticipated. So it's going to be a similar reaction here, I think. If we see 2 million, 3 million, then it's going to be much better, and we might see a bit of a boost to the markets. However, if you look at the German DAX, it's already up quite a lot. And if you haven't traded non-farm payrolls yet, or if you haven't been following the non-farm payrolls since 2006, because that's when I started trading, if you haven't, then I can tell you that it tends to be a brutal day for market volatility. All right, it tends to be quite a volatile day, and the economic data, when the market is as stretched as the German DAX is right now, might not have any impact. You might have a reversal candle. You may not have a reversal candle. So you might be in a situation where you find yourself down with 2.5%, and whatever you accumulated over the last 3 days is gone, or you can go up. And realistically, I think it's going to go down independently of the data. Does this mean that we should go and sell right now? We sell into this? I don't think it's a good idea. I think let's be adults about it and wait until Monday. I know it's bloody boring, but yeah, wait until Monday. Keep your money to yourself. Don't give your money to the markets. I know some people that manage money professionally, they don't trade enough from payrolls anymore because it's all random. They trade other things. Canadian numbers, for example, tends to be slightly more clean reaction. Maybe that's something. If you do insist on trading, maybe trade with slightly less risk or go all in. It doesn't really matter, except to yourself. So you need to make that decision. Okay. My personal view on this one is I reduce returning funding level from this level down here. And guys, this is the last major low. It's not even major. This is the last major low. But this is a low, and then you have this fragile low. So we're like 10% away from that level, 9.23. That explains to you how far this market rallied without really having any correction. So what I'm doing here is just taking some fibs from this low to this high, and I'm just looking for a 50% correction, maybe a bit more. We did get the breakout, we did reach target, we did that good, so I'm happy here. But to get involved again, I want to see that pullback. If we look at the S&P 500 as well, we talked about buying the breakout and going in the right direction, but it's not coming down either here. Here, I'm not going to make any changes. I will just continue to be bullish above 3068.4, from 3068 all the way down to 29.90. And we still have a target here of 31.98. We took out these levels, and the next level according to the target is 3,200, which also happens to be sort of the lows here from February 2020. What else? Let's take a look at gold. And this is gold, and I continue to, the market remains stable for now. There's no question about that. We can see it here, and I still think it makes sense to probably get involved. If we look at the monthly pivot point indicator, the S1 is down here, have some support, and because we're overall dealing with an uptrend, I'd rather be a buyer than a seller. So from about 1680, I think people are going to be looking to buy. Stops are probably going to go down here, and then people are going to target the upside. Okay. If we take a look at crude oil prices, they're also doing good. So we talked about buying the breakout here at 35.89, and we went up a bit. There's nothing bad with that, and we're actually continuing to go upwards. I think we might reach the monthly R1 at 40.56, is what I talked about. But if one is not already in the market, then I will look for a pullback to 34.40. The alternative is that when next week comes, you know, we would have the non-farm payrolls over, and I don't remember data-wise, but usually there is like a busy period that comes up to the non-farm payrolls, and then what happens is that after that is over, you have about 2 weeks where there's not important macroeconomic data coming out, and what happens at that point is you can just focus more on your technicals at that point, because you're not going to have something that is going to rock your market too much. And then we might be able to do it, but you know, you can always look. I'm going to show you something. If you can always just use the small time frames if you wanted to, and you can always find patterns if you want to in the smaller time frames. The same way as I'm looking for a pullback here, you can argue that in the 30-minute you have this low here or this low here, and then you're just looking for a pullback and go upwards. But on non-farm payrolls day, these levels don't really matter, these very short-term levels, because the market can just spike up or spike down. What else? EURUSD. This one is doing really good overall. So we're looking to buy a dip. Fortunately, we did not dip it low enough to be able to get involved. Now, if you look at this now, you know, people are getting a bit too excited, which again, I think is the same thing that we're going to see in something like the something like in the DAX. Is you have a big push and then people get greedy and then try to push upwards, not thinking that there's data coming out in just a few hours time, and now we're going down, we're probing the lower end of this range. And if we take this out, we may go down to 112.70. Now, we could be buying at 112.70 already this afternoon. I'm going to wait until Monday, but technically the trend is bullish above 11.57, and fib from the low to the high, you're looking at for that 50% correction. What are we looking at from a bigger picture perspective? Well, from a bigger picture perspective, is there anything that really warrants like a massive move up or a massive move down? I don't think so. Of course, the US is lagging Europe because they were hit by the virus slightly later, at least statistically, or what they could capture. And then the other thing is that they were slower on reacting. I mean, there's some situations, you know, President Trump was saying, you know, people should go out and protest against the lockdowns. So you have that situation there where things are actually, because of those actions and because of delayed reaction, they're slightly lagging behind. Whereas in Europe, we're opening up, and now people are starting getting excited by European assets. So we're having that push things to the upside. But I think over the next month or two, eventually we'll go down lower. I think we might go up a bit more, but eventually we're gonna go down, and then I think we're gonna be trading at 110 or something like that, as long as you trade below something like 115.86. All right, here's the GBP versus the USD, and the GBP versus the USD is having overall a good day, and we took out this high here, which is the high from April 14th, and this is the high from April 30th. It is, however, the pound versus the dollar, and if you don't know too much about it, it's prone to give you false breakouts. Again, as well, the euro is at a very interesting levels for long-term investors to sell, to push price down to 110 again, 111. So I will be very careful here. However, come Monday morning, and if we're still trading above 124.93, we can go down. I mean, ideally what it does, it closes here at 127, and then you have a pullback, and then you target the upside. The alternative is we just come down and then we don't have a breakout and it's a false move, and then we take out the 124.93, and then we're back here at 123.21. Here's dollar yen. Now dollar yen has been very nice to us because, well, we got the first moves of the euro dollar spot on. In GBP USD, we didn't really have a proper setup for quite some time, but this one actually worked really good as well. This one worked out good, much like the dollar euro dollar. So we said look to buy here at this level, and the market is now at the first take profit level, just ahead of the non-farm payrolls. So you need to ask yourself, because of the non-farm payrolls and as well like random nature, you know, you could be back down here, so you have no profit, or you could be up here and suddenly you have twice your profit. So it's a bit of a gamble, which I don't really like. That's why I think this is a good spot to book 50, if not 75% of profits on that move. And then if we come down to 108.78, we can consider. When would it make sense to buy on that dip? It would make sense to buy on that dip if the US economy is doing better than expected. That is when it would make sense to buy that dip. If the numbers are worse off, then rightfully so, the dollar-yen pair should trade lower. And I think that's it. Let's see if you guys have any questions. It's 10 o'clock, by the way, so we need to leave you guys soon, but let's see if you guys have questions. Okay, so we have Stefan. Stefan, I hope you're doing good. Stefan, I'm very happy for you. I was looking at the dollar CAD yesterday and I was thinking, I hope Stefan stuck to the positions because you should be very happy right now. All right, Stefan, I disagree with you. I don't think I would keep it till that level. I know you went short here around 140 or something. You got yourself a good move. You know, the market is down here from that levels you shorted. The market is down with some 4%, which is 560 4%. Now, I disagree with you, and the simple reason is this. We're dealing here with an ascending triangle. And we had the break here. Now, if you look at this, we reached that take profit level already a few days ago. Some people are going to take the base, and then we might do something like this. So you might have even more, but we're pretty much at those levels as well. So I disagree, and we have all these major highs. I would enjoy the profit. The other opportunities like this beautiful descending triangle, they come a few times per year. And if you trade more than currencies, you know, you'll find something like this at least once a month. It's not always going to be like this though. Many times it's definitely not like this. Many times you just have a false breaker and then it goes up. So yeah, I disagree. I would book profits, buy something nice with the money, not all of it. Well, actually, well, you do, of course, up to you. But I would. It's always nice to buy something. I started to do that a lot. So I buy myself something ridiculous. Like, it's not ridiculous, but I would buy myself something. Okay, to give you an idea, I bought recently. I bought some shoes for £500, and you know, if I would normally take money that I make from my other businesses and just take £500 and put that on a pair of sneakers, I wouldn't really do that. But I put some of the trading money. I don't know, it feels a bit like it's free money. So if you're gonna buy a pair of Gucci shoes for 500 quid, let's do it. And you know what? They last like less than 1 year. So it's an expensive pair of shoes. They look very scruffy now. Yeah, so that's what I do. Before, I never really did that. I just kept the money in the account and kept it forever and forever, and I really didn't enjoy it. But now what I do is, like, when I make some profits, I buy myself something like those shoes. So yeah, that's what I would have done. All right, see if I have any more questions, but I need to leave you guys very soon. Yeah, I think eventually we can go down. I mean, you have some, like, if you look at this, like, so we're here, right? The thing is this, though, with crude oil, it's still not closest 2020 high. So you still have 129, you know, that you could potentially see. And yeah, I guess from this perspective, we're pulling down, but you do have things like the Aussie dollar USD, where you did actually see the market here. Aussie dollar is back as its 2020 high. So this one recuperated fully. Maybe we'll see the same in dollar CAD, but maybe you're getting a bit too greedy. That's what I think. You can book some of it. It's up to you what you do, but I would have booked and enjoy the money, and then just look for another trade. All right. Good morning, Maurizio. So Simon Jones says, any thoughts on airline stocks? Many jumped 10% in the last 24 hours. Do you think it would be wise to close some positions? It depends on really which one you're looking at, Simon. I mean, there was some news. There was on the FT right now. At least in the UK, European stocks rises. Actually, It was here just recently. Yes, European holiday destinations push for UK travel, UK corridor. So they're going to open up Turkey, Greece, Spain, and Portugal. So they want to get UK people to come and visit their countries without the quarantine. So, I mean, Lufthansa had a breakout. I mean, you need to look at it. I don't really track them too often, really. I think it's this one. If you look at this one, you still have a bit more to go, really. It's up to you, really. Depends on your actual strategy, what you want to do. I think ultimately, you know, if you look at this from a purely trading perspective, then we usually use Lufthansa as an example. Then, you know, we're heading to the midpoint here. So we might head to 12, maybe head a little bit higher, and then we'll see what happens. I think 13 wouldn't be unsurprising. But you need to, if you're just trading short term, then you probably want to take profits. If you're happy to hold positions for a longer period of time, then I think we can go slightly higher. Let's take a look at Air France. It's called KML, right? KML or Air France. Let's skip this for now. It depends, really depends. Longer term, I think Lufthansa is probably gonna go up. Okay, so we got a question about pound Aussie. So pound Aussie, I think last time I checked it was in a downtrend. Alright, so this is the pound Aussie, and the pound Aussie is going down, and it is obviously slow to decline since June 2nd, but you're still dealing with a downtrend. I think as a minimum, you probably need to trade above 153.28, but more realistically, you need to trade above 186.93. If you look at it from a big picture perspective, then yes, you're dealing with an uptrend, but you would need to be willing to hold stop loss orders at 75 or something like that. That's what I would say. So it's too early, I think. I would be more comfortable saying anything about this one. I mean, it's bearish now, so it can go up and then probably down. And because until you have something like this, it makes sense, or a trigger at least. Right now, what's moving things is the fact that the world is opening up, and for an exporting country like Australia, is great news that China's improving, that the rest of the world is improving, but China in particular. Then you have the UK with Brexit coming up. Negotiations are not going at all as the UK wants. The UK wants some sort of a deal that the EU has with Canada and Norway. But the thing here though, in Japan, the thing is this though, is that some of these deals make sense because Japan is on the other side of the world. Canada as well is very far away. If you give such a good deal to some of your neighbors, then the EU doesn't like that because they think, oh, actually, you know, it's gonna give them an advantage we don't want to give. And then the other thing as well is that it looks quite clear that the EU wants to punish the UK and give them a worse deal, because if they give them anything good, then any of the other countries that want to leave won't not like to leave. And it has already had an impact. Like, for example, political parties in Sweden, they don't want to leave anymore because they're looking at the UK and they say, we don't want 7 years of that, or how many years is it? I mean, it's going to be something. Typically, these trade deals take 7 years to fix. So, and I think that's a strategy as well. So that's complicating the issue. So yeah, it's a downtrend. It is a downtrend, and I would look for this to stabilize before doing anything here. Okay, guys, I need to leave you now. I want to thank you so much for joining me, and if you do have any questions, you can always reach out to me via AlexFX00. But please don't reach out at the last minute. People usually reach out to me when they're down with like 60% of their account, and then they ask me if they should close or the trades. When the account is down so much, there's very little I can do. to help you. I can help you when you have money in your account, not when you're at your last dime. Because if you want to do it the way I do it, you need to have a proper risk management system. You got a proper entry system as well, proper system to manage stop loss and take profits. That's when I can help you, but it's impossible to do anything if there's no money in the account. So most welcome to reach out to me, but please don't do it when you're in the last dime. And if you do want to have education, we always have this button here. It took me some crazy 8 years before I became profitable, and the reason for that, I was doing a lot of the mistakes back then, and primarily I was trading short term. That was the number one reason why I didn't make money. When I started trading slightly more long term, that's when I made money. And I guess as well, I grew up a bit. I was quite young. I was 23 or so when I started to trade, and this obviously comes with experience. So if you have been struggling for some time, or you don't want to struggle, then that courses, you want to check it out. But if you've been doing this for 2-3 years and it's still not working out, then I'm sure you're doing what I was doing, which is what everybody else is doing. And they're trying to trade very, very short term all the time with too much leverage. And that is not a winning strategy. Okay, guys, thanks so much for joining me, and I'll see you guys on Monday. Bye-bye.